AMD reported earnings last week and the stock dropped 10%. Shares are now down 35% over the past year, taking the company's market value to $181 billion. Account for cash and debt on the balance sheet, and the enterprise value is $179 billion. Revenue over the last 12 months comes to $26 billion, with $1.6 billion of net income, $6.8 billion of adjusted EBITDA, and $2.4 billion of free cash flow. So AMD stock is now valued at just under 7 times sales and 113 times earnings. AMD's chips are used across a wide range of devices such as PCs, laptops, servers, and gaming consoles, and its revenue is reported across 4 main categories. In 2024, data center revenues almost doubled to $12.6 billion, and client revenues grew 52% to $7 billion. But gaming revenues fell 58% to $2.6 billion, and the embedded segment fell 33% to $3.6 billion. Despite those mixed results, AMD is well positioned thanks to its diversified portfolio of CPUs, GPUs, and various other processors. Management is betting that different types of compute require different types of hardware, and that seems like a good strategy. NVIDIA GPUs, for example, are regarded as superior for artificial intelligence training, whereas AMD chips could be better suited for the AI inference phase. And so the bull case for AMD is fairly simple. Data center and client revenues should continue to grow as the company builds out its AI hardware. The latest MI350 chip should come out later this year. Meanwhile, gaming and embedded revenues should eventually recover, driven by new gaming consoles and defense spending. In that context, AMD stock is not as expensive as it looks because current earnings are being impacted by weak gaming revenue and investments into AI. However, there's also a clear reason why the stock fell last week. Fourth quarter results were good, but management guidance suggests that data center growth is unlikely to continue for the next couple of quarters. AMD CEO Lisa Su said that data center revenue for the first half of 2025 would be roughly flat, implying a modest slowdown in GPU sales. That may not matter for the long term, but it does raise questions about the company's valuation. For example, if you assume the company can grow its top line revenues at 20% per year for the next 10 years while operating with 13% free cash flow margins, the company should generate around $104 billion of free cash flow over the next 10 years. A simple discounted cash flow model then puts the valuation at around $95 a share, which is lower than the current price. In other words, quite a lot of growth is already priced in. AMD is a leader in the design of chips, and the breadth of its portfolio is a major advantage. However, competition, tariffs, and a rapidly changing industry means that AMD needs to always invest heavily to keep its place near the top. That makes this a tricky stock to value, and considering the modest guidance, now may not be the best time to put money into the stock. But these are my personal opinions, not financial advice, and I hold no position in AMD stock. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.